Hello, I'm Jim Adams. Today I want to share with you how I feel about FIRE, which is financial independence, retire early, and how it relates to the options wheel strategy. Using the wheel strategy, you can actually reach FIRE a lot quicker than you ever thought possible. I also have a demo at the end of the video where I share with you how to actually do a covered call using the Schwab online portal. So stay tuned. I'm sure you're going to enjoy what I have for you today. Thanks for joining me. Welcome to the Easy Investing Income YouTube channel. This is a channel I set up to share with people that you can actually do quite well selling options. A little over a year ago, more like 14 months ago, I decided to dig deeper and really learn the right way to sell options. I've been selling what's called covered calls for over 10 years, but really didn't really have a clear idea of how to do it the right way. So I decided to kind of start a journey and learn the right way to do it. Since then, I've been able to average in my brokerage about 2,000 a month, which is what I want to earn at this time, primarily because I'm on Obamacare and I have subsidies, and if I make over a certain amount, then those subsidies go away. Now, in my retirement accounts, I started 2 months ago to dig deeper with them, and I've been able to do even better in my retirement accounts. So, this channel, the main goal is to share with people, my journey, what I've learned, with the hope that you don't have to go through some of the negative things that happened to me, having a loss on some of your trades or having things assigned when you're not really ready for them to be assigned. Today, I do want to talk about FIRE, which is Financial Independence Retire Early. It's something that's been around, and I think it died down a little bit during COVID last year, but I've noticed a lot of people are asking really good questions. They want to retire in their 40s and 50s. Now, I've reached financial independence, and in a way, I don't look at it as retirement. I'm doing the things I want to do. It's more like FU money, if you know what FU money is. So I'm doing like this channel, I'm doing the blog that goes along with this channel. And, so a way, I like FIRE, but the retire early, I don't look at it as retire early. I don't know what wording you would use to change, but to me, it's financial independence so you can do what you really love to do. And that's what I've been able to do. And that's what I want to encourage others. Now, in order to reach financial independence, you need a few things that are critical. You need to be sure you understand what you're spending on a monthly budget. So you have to have a clear idea. Like for me, I need about 4,500 a month to live. So between my dividends and what I make selling options, I'm able to reach that amount, and then some extra, having a little cushion in my budget, I can actually earn more than what I need on a monthly basis. Another thing is you need to understand that you want your money to last. So using something like the 4% rule, which I've done other videos on it, but in short, if you can live off of 4% of whatever's in your brokerages and your retirement accounts, that is, if you're old enough to draw from your retirement accounts, you are pretty safe, meaning, those accounts are going to not go away. They're going to last. And that's what I've found since I've been doing this. I've been able to, use the 4% rule to kind of be sure that I have enough. And from what I can tell in every instance, I don't just have enough, but I have more than I need. So it's another good idea too to along with the budget and the 4% rule, you also need to have a clear idea of what you like to do. So before you can retire early or reach that retirement pinnacle, in my mind, you're not going to do well if you don't have a clear understanding of what you like and what you don't like. So dig deeper. For me, I've been a software developer for many years, and I've enjoyed it. I like doing software, but I really like finance, and that's why this channel is something I enjoy doing. I enjoy sharing with others. So now, how does this relate to the options wheel strategy? The To me, with the options wheel strategy, you're able to reach that 4% or the income you need on a monthly basis a lot quicker. Now, let me do a quick example of the option wheel and how it actually works. So, if you have an account and say you're interested in buying Coca Cola and you've got enough cash to buy Coca Cola, especially 100 shares of Coca Cola, you could sell a put to someone. And by selling a put, you actually earn premium. And what you're selling is someone the ability to sell you those shares at a certain price. So, say I want to purchase Coke at $50, someone may pay me $50 to $100 for the opportunity to sell me Coke at $50. Now, if Coke goes below $50, it's most likely going to be assigned. If it goes above, then it's going to expire. So, you run into a situation where you may keep rerunning these, selling these puts and making more and more premium. But when that happens, you take more risk. So, with the goal being at some point you do get assigned. So, what happens is then you do get assigned, someone actually sells you those 100 shares. And now that you have 100 shares of Coca Cola at 50, you can look at selling what's called covered calls, meaning you already own the shares, so you're covered. And say you want to sell Coca Cola at 55, well, you can sell a covered call where someone is willing to call those shares from you and pay you a premium. So then on the other side, you can earn more premium. And you can find that this premium can be quite a bit of money, and it's quite a bit. It adds a nice return to your existing return. So if you just bought Coca-Cola, you would just pay the $50, and then if it got up to 55, maybe you would sell it. But you can earn a lot of extra premium, and as you're going and you're earning more and more cash, because I find a lot of times my accounts, I start growing a lot of cash, so it's like the wheel starts spinning faster and faster and faster. So in a way, it allows you to earn a nice income. It's like selling insurance almost. You can earn a good income on your account and have a lot of cash. So most of my accounts now, I have a good 25 to 30%, and this is also my retirement accounts that are in cash. And I keep doing, I'm starting with one contract, then I go to two contracts as I get more cash, and I take a little bit more risk, so I get more and more premium. So I found that in my brokerage, I'm doing about half a percent a month, which is like 6% a year. So an example is I've got about a $500,000 in two accounts, which most of the stuff is invested in those accounts. I have maybe a quarter of it is cash, but I'm able to earn about 2,000 to 2,500 monthly. Initially, when I first started, it was more like 1,100. Now in my retirement account, since I'm not worried about earning too much, I've been able to do I've been able to do 1% and slightly more. I'm hoping I may even be able to get to 2%. So for a retirement account, you can really spin that wheel quickly, and you can actually reach retirement a lot quicker instead of having, say if you didn't do anything with that account and just created ETFs or bought ETFs and had ETFs, maybe you got a 10 to 12% return on a yearly basis. Now we've had some great returns recently, but if you look long term, the average in the market is more like 10 or 12%. But if you can do an additional 10% by selling these options and using this option wheel, well, really you have a 20% return. So you can reach your goals twice as fast. So, and that's kind of how the wheel strategy works. In my previous video, I think it was my previous, it may have been two videos back, I showed you how you can do a cash secured put, and I actually did a demo. At the end of this video, I'm going to actually share with you how to do a covered call, and I'm going to do it on Southern Company, which is a company that's not very volatile. But instead of just letting it sit in my account, I can also sell covered calls. For this one, I had to go a little farther out, and I did it, or I actually sold it a couple days ago. So you'll notice in the video, I think I'm wearing a different shirt. Of course, I've got my trusty hat on. Also wanted to mention that before we jump into the demo and I share the demo with you, I am set up with Patreon. I've got two different levels. You can become a patron. All my spreadsheets as well as I'm going to have early access for the higher level. I think the lower level is $10 a month. The higher level is $25 a month. But for the higher level, you actually will get where you can communicate with me regularly. I'm also going to start having weekly conference calls where we can discuss stuff and I can actually help people. I've had this going for a little while, but I've only had, I think, two patrons. So I encourage you to take a look. And again, all my spreadsheets, the stuff I share, I'm going to be putting out there. So it's well worth your time to take a look. So, that all being said, thank you for joining us. As always, subscribe, hit that like button, and let's turn over to the demo of how to actually do a cover call within Schwab. So I hope you enjoy this next demo, and thanks for joining me today. Okay, I've logged into my account and I pulled up Southern Company. So I'm looking at writing some covered calls for Southern Company. Now, Southern Company, you can see, is a utility and it doesn't move much. So here's the 1 year chart. You may have heard that noise in the background. It's my dog. She's moaning. She wants to go out. So you can see I have a 67.54 is the high. Now, it did have I think it went down to 56. I believe that's what that is. Back over early in the year, but recently it stayed in a pretty small range. So if I can get it near its high, which is around 67, or if I can sell a call near its high, then I'm doing well, especially if I can pick up some nice premium. So let me actually show you a little bit more about Southern Company. One reason I like it so much is it pays a good dividend. So here you can see it increases its dividend every year, and it's been increasing it between 3.4 and 3.5% every year, going pretty far back. I think it shows here, it goes all the way back to 2011, and you can see in 2011 it was $1.87. Last year it was 2.54, and I think this year it's going to be even higher than 2.54. So that's something I look for. I like companies that pay good dividends. How I make things work is I sell options and then I also get good dividends. So let's go back to summary and I'll show you what the dividends look like for Southern Company. So if we scroll down, you can see the dividends are 4.17%, which is a really good dividend. And it's very steady. It's a good, healthy company. It's ranked a C, but if you look at the quality, in my mind, it's higher than what it shows because it's been a steady performer for me. I've been trading it for probably going back 10 years and probably have done 20, 30 covered calls on it. So let's jump into the options. And this is the initial page they always throw you in. So let's go and pull up the full option chains. And let's change to Greeks. I'm going to cover that up a little bit. And let's go out some distance because you typically have to go fairly far out to get some premium. So let's go at least 37 days. So that first 37 days, which is December 17th, this is delta. So you can see the delta is kind of weird. So I could earn 45 to 55 with close to a 2.8 delta. So that's not going to work for me. So I go a little farther out here. Looks like I can do between 25 or 40 or take a little more risk and do between 50 and 70. So with a company like Southern Company, it's something I've had in my account for a long time. So if I just don't do anything with it, I don't really get these premiums. So that's why I'm doing it, even though I'm having to go farther out than typically my 30 or 60 days I like to do. So here's the next one. We've got, again, 1.6 with between $30 and $40. So let's keep going. I'm going to go a little farther out. This is 100 days, which is a little more than 3 months. And right at 20%, we've got $50. So I'm going to keep going out. Let's go a little farther out. Let's look at May 20th. So this is this probably qualifies as what's called a leap, which is a longer term covered call contract. So here for $1.15, I can get 67.50, which is near its all-time high. So I'd be more than willing to take that. So I can click select. I can come back up. I'm going to switch this to calls, and it'll show where it's selected. Now, I like to do it this way. A lot of people can just click trade from the screen we were previously on. I just like to do it this way. I don't know, being a little weird, I guess. So you can see the last person got $1.22. So I'm only going to do one. If I can sell only one option contract and make over $100, then I feel like that's a great trade. It's a good amount of premium. I typically like to get between 100 and 150 per trade, so I only have to do around 15 trades a month to reach my 2,000 that I'm trying to earn. So here you can see it's bid and ask. It's between 115 and 130. So typically what I do next is I do sell to open because I'm selling a contract. Someone's paying me premium to buy that option to call those or to call the stock away from me at that price. So if Southern Company goes way up, maybe it goes to 75, they can make some good money. But what I found is in a lot of cases it never goes that high, and if it does, I can roll it, I can close it. I have options of things I can do so I don't take a loss. Or I could take a loss if it's a small one. A lot of times I will sell, I will close a position if it's a small loss, or not really a loss, but if I can get a 90% profit on the trade, then I'll close it. And usually that's between $5 and $10 to actually close the trade. So here I'm going to do a market order. And again, the reason I like to do market orders is primarily because I don't want to be doing this all day. This is how I keep it passive. I run the order, I get done, and I go on and do other things. I got to take my dog here for a walk, so that's high on the agenda. So here we can see I can make 115, which is good for me. So I'll click on review order, and it'll show you the fees and what things cost. I like what I see, so I'm going to place the order. And then it went through. I can look at order status. And then here you can see these are some other trades that I did. Here's the one I just did. So I got $1.15, which is what I wanted, $115 for one trade. Took me 5 minutes. A great way to earn some passive income. So in short, that's how you do a covered call. It's real simple. What you need to do this to start with is 100 shares, because if it gets called away, you want to have 100 shares at least. Southern Company's not expensive right now. I believe it's around $63, $64, maybe pretty close to $65. But you can do something like Ford that's $19. Another company I'm looking at, you can do, I think HP is like $25, $30. So you can find some good stocks that are inexpensive if you want to try this. And to get started, you can do exactly what I did and take even less risk. You saw I was looking for a delta that was right around 20. You could do a 10 delta, meaning maybe you only get $20, $25, but you actually are able to initiate the transaction or the contract, and you can see the money appear in your account, and then you get more confident and you can take more and more risk as you get used to it and you do more and more trading. I've learned the hard way in some cases. One of the first trades I did backwards. I called Schwab, and they walked me through how to correct it and undo it. So if you do make a mistake, you can, in a way, do the reverse and close that position pretty quickly so that you don't get yourself in trouble. So I hope you enjoyed this. This is what a covered call looks like. It's relatively simple. It's one of the simplest trades of selling options, and it's part of the wheel strategy. So hope you enjoyed this demo. Thank you.